How's it going? I'm Andrew with Investors Hub, and we're talking to Clem Chambers today because it's Clem's Day Wednesday, talking about cryptocurrency, and we're going to be chatting with him about stablecoins, what they are, how they work, and how they benefit you, what you can use them for. And I brought it up because there was an article on CNBC that popped up recently that was talking about some controversy around the stablecoin Tether, which you may have heard of. It recently got added to Coinbase a couple of months ago. And yeah, if you like the video, be sure to like, comment, and subscribe. You can follow us on Twitter, ihub_vision. And after a quick disclaimer, we'll hear from Clem. Please note that our videos are not designed to be direct investing advice. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So Clem, talk to us a bit about stablecoins. I know that there's some controversy around them with them not having the amount of assets in, their secure vaults that people think that they do.
Okay, it's not really that simple. There's one coin in particular that is a bit controversial, which is the actual original stablecoin, which is Tether, because it's had a bit of a rock and roll existence over the last, several years. And, everyone says, oh, well, it's not completely covered. Now, that won't mean much if you don't know what a stablecoin is. But let me tell you what a stablecoin is. A stablecoin is a crypto that always remains at $1 or very, very close to it. So, for example, if there was a big, massive move in the market and Bitcoin collapsed, it might go to $1.01. Or, if something goes horribly wrong, $1.04. But it'll always be coming back to $1. And most of the time it'd be $1 or $1.0001 or 99.999 cents. As near as you care, it's $1. Now, you might say, well, why do I want, after all, I can just be in dollars? I mean, why do I want a stable coin that's $1? Well, it enables you to do the following. Say, for example, you're in Bitcoin and Bitcoin's 60,000 and suddenly you go, I don't want to be in Bitcoin. Well, what are you going to do? Oh, I'm going to put it in Ethereum, but Ethereum will crash as well. Well, I'll put it in Dogecoin. Well, that's going to crash even more. Well, what can I put it in that's not going to crash? A stable coin. So it enables you to move in and out of crypto and go to dollars without actually selling Bitcoin into dollars and then holding them as dollars, because most of your exchanges don't want anything to do with the real dollars. They only deal in crypto. And half the time, the reason they deal in crypto is because they're not actually allowed to deal in proper currency at all. They're not regulated for that. So it's a crypto equivalent. And companies have made these stable coins and keep them stable by basically, when you buy from them, they get $1 and they put it in their bank. Now, if you were a exchange, for example, a few years ago, who remain nameless, but you can look them up, who put $250 million of their stable coin backing into a bank in the Bahamas, who then said, oh, by the way, we've taken your money and we're shutting down. Goodbye. And they lost $200 million because the bank went, well, our bank's worth $15 million because it's the Bank of Never Pay in Trinidad and Tobago, wherever they were. It's much easier for us to steal this $250 million and shut down than carry on being a bank. And that's what they did. They stole the money. Well, that means that coin is now $250 million short of its backing. But as it happens, that backing is actually billions. And it may or may not be backed by that $250 million because it's not transparent. But that particular stable coin has been going for years since then and doesn't seem to have a problem, because ultimately you don't have to back it all up. Because if you think about, for example, currencies, they have in the past been backed. And for that matter, your bank's cash reserves are only about 10% backed. So if they've got $1 billion in deposits, actually they've only got 100 million in cash. Yeah, and that system works just fine unless there's a bank run. Now, and you have to do your own research on stablecoins, most stablecoins, and my personal favorite is USDC, are fully backed. And they're not only fully backed by the currencies, by the dollar that they back, because every time someone buys one of these USDCs, they give the company $1. So they've got that, and they stick that in the bank, and they look after it, and they use those dollars to stabilize the currency if it goes up and down. And coins like DAI, which are also stabilized by different mechanisms, but the same idea of always keeping it to $1. And because it's backed, these companies are also in the main backed by very large venture capital money from Silicon Valley to the tune of hundreds of millions of dollars as well. So these are proper businesses, and of course they're very profitable ones because they are issuing money. So they have what's called seigniorage. So when they actually sell it, they might be selling it out at 100.5 cent or 100.1 cent, and every time they issue a new one, they get 0.1%. Well, when that's billions of dollars, that's a lot of money. And when they're stabilizing, of course, they're also making money because they are buying it cheaper and they're selling it more expensive to keep it at the 0.0. So the mere act of stabilizing that currency makes them money. It's very much like ETF business, and it's very, 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 very profitable for them. So generally speaking, and history has shown that stable coins are very stable and are very strong and very reliable. And I know because I have a reasonably decent chunk of capital in the stable coins because I'm out of crypto and I don't want to send it to my bank and have them go, where did this come from? This came from crypto. Oh, well, I don't really like that very much. And I want it to be close to the market. So if I decide that the market is, say it crashed tomorrow, I'd probably be buying. But I don't want to have to ring up my bank and say, send some money to this crypto exchange, even if it is Coinbase, because my bank will freak out because they don't like crypto. Yeah, or it'll take 3 days. It's there, sat in a account in crypto that I can go and buy Uniswap or Bitcoin or Ethereum, whatever I want to buy it for, and it's parked in stablecoin. Now, another good thing about stablecoin is that you can take it to DeFi and lodge it and get interest. So right now you can get like on Aave or on Compound, you can get 2.5% interest, which is about as much as you can get for your dollars if they're in dollars. Now, if you push the boat out a little bit and go to somebody else, a BlockFi or any one of the number of people that offer interest on stablecoins, you can get 3, 4, 5, 6, 7, 8, 9, 12 and more percent interest on your stablecoins. And for example, Compound and Aave and BlockFi, which are the three main players offering somewhere between 2 and 8%, these are all backed by huge venture capital. These are proper businesses which have been funded by hundreds of millions of dollars and are worth billions in their own tokens. So those interest rates are real, and good companies are offering 5, 8, and as much as 11% on deposits of USDC, which is US dollar crypto, or even more. They're a percent or two more on Tether, which again, Tether is considered a little bit less stable than all the other ones because it's linked with an exchange that isn't a huge VC, that has had a bit of a rock and roll time over the last 10 years, and therefore if you hold that, it's a bit more risky, and you get a couple of percent more for your risk, which is how markets should work. But 5% from a BlockFi or 8% from a Celsius or 2 or 3 or 4% from a Compound, which also give you Compound tokens for doing so, so you end up with like 4%. That absolutely beats the living daylights out of a bank and what they'll offer you with the treasury rate at nuppence. So once if I was an investor that didn't have a pile of stable coins lodged at 2, 4, 5, 8, 11%, I would actually be turning my dollars into stable coins to lodge with DeFi people to give me that rate of interest, because that's a big amount of money if you've got a lot of capital which is not doing anything. So that's another use for stable coins. So stable coins are really the backbone of DeFi. That's what makes DeFi work. The fact you could flip into a dollar stable coin that people want to borrow. So for example, imagine that I am an Ethereum billionaire. And Ethereum is 2,000. I think it's going to go to 10,000. But I want to buy a house. And that house is going to cost me $3 million US. So what am I going to do? Sell my Ethereum and lose all that upside? Well, no, I can go on to Aave, or I can go on to Compound, lodge, 10 million Ethereum, and I can borrow in USDC. I can borrow probably about 8 million. And, if Ethereum goes down, I just lodge more. I've still got my Ethereum. I'm paying some interest in dollars on Aave. I've got all the collateral in the world, and I'm not actually selling any of my precious Bitcoin or Ethereum or whatever to get there. And so has a really huge need, and people might pay 7% for that. Well, I can lodge my USDC And I'll probably get most of that 7% from the guy, the billionaire who wants to buy his yacht, or he wants to buy his Florida beach house. That's how DeFi works, and it's all enabled by stablecoins. So the stablecoins enables people to borrow money, to sell, to deposit money, earn interest, and then turn crypto into all sorts of products, insurance products, borrowing, lending, and deposit products. That's what DeFi is all about. All these fantastic different new finance products, new banking products, as they call it. And, DeFi is powered mainly, or the spine is the stablecoin, because the stablecoin is stable, is always a dollar. So you might go, I don't want a Bitcoin because I think it's going to go down. You put it into stablecoin. Bitcoin goes down. You buy Bitcoin with your stablecoin. Or in the meantime, you could be earning 5% interest rate on it. So the stablecoin is very much the backbone of the whole of the ecosystem of Ethereum and DeFi. And that makes it very, very exciting. It's an extremely powerful tool. Personally, I have a lot of stablecoin, and anybody and all the people I know who are a bit leery on where Bitcoin's going next and prefer to stay out of the market, they're all in stablecoin, and they've all got it lodged, and they're earning their 3s and 5s and 7s and 8% interest while they wait for the market to turn. And, that underlines how good it is. Because, let's just say you made £1 million in Bitcoin and you got out and you're waiting for a crash and you're waiting to get back in again. Well, you're going to be earning £80,000 a year or $80,000 a year by lodging it with a Celsius, or lodging it with a BlockFi, or lodging it with a probably $50,000 a year from a Compound or Aave. Well, you just pull that straight out and turn it into US dollars and send it to your bank. I mean, that is very compelling. And that is really the core thing about the stablecoin.
Hey, thanks for watching, and be sure to like, comment, subscribe if you hadn't already. It's super important, helps the channel grow, and I'll see you again soon.